What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide technical analysis on Sundays before you get prepared for the week. And I also do provide daily content, pulse of the markets on X at Hemi137. So, before we get started, remember to also smash the like button to get the word out to get you prepared for the week. If you are a trader, if you are an investor, I look at essentially supply and demand, and I use a lot of essentially macroeconomics to kind of judge where the market could be heading in the next roughly about 2 to 4 weeks. I don't like to project too far out, as it is very unpredictable. The market is very dynamic, and so you need to be adjustable on the fly. So, with that being said, like we always do, let's go over the weekly recap. Again, we have currently ended our our quarter and getting ready for the next earnings cycle, something I've been preparing for, something I've been talking to everybody about. The next several months, the next 5 months, are going to be extremely important as we head into the new election and understand where we could be headed from here. Now, to preface a lot of this, what we've been seeing, what I've been talking about is a recession. I believe we've been in a recession for a long time. You're starting to see a lot of corporations reflect the things that we've been talking about. You've seen Home Depot have about 5 quarters now, along with Lowe's, of really bad earnings. Despite the wordsmithing that they do. Again, this is a tactic that is currently used even during any kind of recessionary period. They try to paint the picture of this utopic economy that is non-existent, despite what data is reflecting. Again, if you look back at the 2008 crisis, I know you've heard it many different times, but you have to understand that you have to be able to control the chaos, and to be able to do that, you have to control the narrative. And so they go back and essentially they uh, re uh, reevaluate the actual data that's currently going out again until that it's been officially until you've officially come out of a recession. And given that we may be looking at a depression at this point because we've been suffering, we've had a lot of rolling recessions, but it's getting a lot worse, a lot more rapidly. So much so, I do believe that the Fed is in trouble, and again, they have to understand that they're going to react to something that is going to be very bad, but ultimately understand that the Fed, Bloomberg, they're all questioning the types of reports that are coming out from non-farms because data just is not adding up. So, with that being said, again, we're going to be onslaughted with tons of news. Starting not this week, but next week we start getting into some big bank earnings. And like I've always stated, what happens is a lot of these earnings are front loaded with industry leaders and tons of news. So they like to essentially flood you with news to hopefully get some information by you so you don't notice that banks are in advanced talks to getting acquired because they're going belly up. Now, to understand that you are in a recession, you have to understand that multiple banks have closed over hundreds of branches. You have another additional 62 banks, excuse me, that are on the cusp of potentially being lost. Not only that, you had the Home Depot, you had Lowe's horrible earnings, you have Apple horrible earnings. Apple's got rated in the car. The Apple Pros 2 have been delayed. Again, multiple horrible earnings. They're laying off. Tesla's laying off a lot of people as well. Continuing to layoffs despite a lot of these tech companies that are doing very well are essentially being held up by Nvidia, and understand that the potential of what's there with AI will have to help us get out of the current situation that we're in. and then it will put us in a essentially, this is how we innovate to do better, to work, to make things more cheaply, to essentially advance our production to be able to keep up with the amount of spending that we're doing. Now, I do also want to preface all this. I know there's a lot of prefacing going on here because you are getting ready to go on earnings. And like I've stated, the next 5 months are going to be extremely important how this plays out. You have to understand that we are already in a recession. It doesn't matter who gets elected, they will be blamed for the recession. So just putting that out there, you have to be aware this is just the system in itself. It has nothing to do with the presidency. There are policies that get put out there that do affect it, but again, that's a very delayed reaction on the different policies that roll out. But ultimately, understand our current environment, because of the way things were set up, because of the pandemic, because of the strain on resources, has caused inflation, because we printed 40% of the money supply. All these things have added up to our current situation. It takes years for this thing to play out. And with all that being said, let's dive into some of these things, highlights. Again, there's still a lot of talk about our current situation, despite there not really a lot going on in the market because we're prepping for earnings cycle. But we did have core PCE fell to 2.6 versus expected 2.6. Again, these reports are manipulated. If you look, there was a viral video that went out as well about a guy who had bought, I think it was like, I want to say it was like 45 different items from Walmart just over 2 years ago. The essentially price tag came out to like $125. Then he tried to repurchase those same exact items, was well over 400. I think it was like 425 or something like that. To say inflation is defeated, it is not. Again, I talked about these particular reports and highlighted these reports when they were occurring. It was a 2-year essentially average. They wiped that out last year and only made it a year. So you're not getting the full understanding. Yes, it's only 3.2% or whatever the case is that we're currently sitting at for core, but you have to understand that over the past 5 years, it's gone up massively. And so much so that they're essentially nitpicking specific items out of the list to bring that down to expectations. So inflation is still very high on items. And you have to understand, when you're in a recession, people buy generic grocery store brands. People do everything they can to save money. They don't go out and eat. We're seeing that reflected in McDonald's. Arby's just came out this past week. They are filing for bankruptcy, right? You're getting all these restaurants, Starbucks, Home Depot, right? Housing industry in itself is starting to catch up as well. There's becoming more and more supply as insurance is getting out of control. For a lot of these people to have to afford insurance, even though they may have a good rate. The Fed is ultimately waiting for more supply of houses. That's how you get a housing market crash, and price correction is with more inventory. And there hasn't really been a lot of inventory till recently. There's a lot of particular areas like Austin, Texas, and a lot of areas in Florida that are starting to go through a crisis because there is more and more supply being added. Yes, people are still price gouging, but they're staying on essentially listed for longer than 30 days and having to drop prices. So you have to pay attention to these things. Nevada, for some reason, and Las Vegas has been doing pretty well, considering the last financial crisis. They were one of the leading indicators. So you have to understand it changes all the time and it fluctuates. This is what we try to talk about when we talk about inflation, and understand that inflation fluctuates. People aren't in a good spot, so they are going to buy generic or skipping meals. People can't afford to live. That can only be sustained for so long. All right, this shouldn't have been delayed this far. It should have happened last year. But again, coming into election year, they are doing everything that they can to keep this market propped up. This is why you can't bet against the Fed. This is why you can't bet against BlackRock, because of the fact that they will keep this thing sustained till when they want to actually drop. A lot of CEOs have been selling out of positions because of this fact. A lot of companies have essentially done stock splits to make them recession proof because they know it is coming. So with that being said, 2.3 trillion of savings has been depleted by Americans since August of 2021. So all that money, all that debt that people paid off after the pandemic with all the free cash flow that we had, people are even in worse condition now. All their savings There's also the Rolex indicator, which has dropped about 50%. Rolexes have lost the value about 50%. Automobiles are starting to the automobile dealers, they can't move the metal. So essentially what's happening is they are having to price correct right now. You're seeing that in the auto industry. There's a lot of delinquencies in automobiles. People can't pay insurance because they have skyrocketed. And not only that, the price gouging that has been occurring over the past couple of years, the automobiles have been correcting. So you're seeing that as well. So all the things we were talking about are starting to correct, which is a great sign. But again, it takes a very long time for housing to correct. Now, by the time housing actually fully corrects, which I think will happen, sometime in the next 16 months, I think is about a good time frame when housing will truly correct. And the stock market, I believe, will well ahead of time. Something I talked about, the market is very good about pricing in these things ahead of time. Once we start getting rapid rate cuts, you see the inversion on bond yields. That is when you're going to start pricing in a recession, because there will be new fear. And then from that point, the market will recover. And then again, you'll have a couple of years lagging when it comes to housing. So just keep that in mind. Again, some areas will do better than others. A lot of people have moved to a lot of these cheaper cities because they are trying to save money. So you have to understand there's always a shift. And that's what you have to keep in mind. It's just because your area might be doing well, there's a lot of areas that are not. Again, Colorado, Texas, Florida all blew up over the past couple of years because of what's currently going on. So you have to keep that in mind. That being said, Nike and Walgreens had massive drops after earnings report and essentially future guidance, right? And understanding where the consumer is, right? And it doesn't have anything to do with pharmacy when it comes to Walgreens, but you have to understand is essentially that the consumer, it doesn't have excess cash to be buying all these things that support Nike or Walgreens, right? You have to understand that people just do not have the excess cash. It's basic necessities. It's survival mode at this point. Something I've been talking about. And if you haven't noticed that, it's going to continue to get worse as the Feds keep the rates where they're at. And it will get a lot worse because they know inflation is still bad. They know unemployment, they're questioning unemployment because, again, unemployment numbers that come out are way worse than what is actually being advertised by non-farms. And so they're aware that there's some pencil whipping going on there. We don't know where exactly we land, but once they actually see the current reflected numbers being true to what is actually going on, again, with the pencil whipping on the full-time jobs has been diminished a lot. We're losing tons of full-time jobs and getting a lot of part-time jobs. Again, people just can't keep afloat. They can't keep this going on forever. And then once that tower starts to crumble, it's going to crumble very quickly, and it's going to look like it came out of left field. It's going to look like a black swan. Then again, whoever is president next year around this time will be blamed for the recession, despite what we're already seeing. This is already supposed to occur over a year ago, and they're postponing it by printing money, sending it to Ukraine. War helps fuel, or helps essentially kind of filter what is actually going on as they are creating jobs and stuff to support essentially the war. And if this is, again, a good reason or a theory in which you can say that if it wasn't for the war in Ukraine, which they've been trying to stop for over a year, that the whole economy would collapse, because that is essentially what's keeping up all the other the GDP numbers from even going negative at this point, and many other potential problems there. So with that being said, we had a presidential debate over the past week. Not trying to get political. Biden got railroaded, right? It's almost like they're throwing him to the fire. But nonetheless, we have to understand where the economy is going. And the market will move off of who has a better advantage in the market when it comes to a president. Now, if, again, Democrats come up with a new candidate, that could influence how the market will move. Because you have to understand, once a particular president goes in, they have specific policies that are looking for when it comes to trade and stuff like that. Those are what you need to be paying attention to, because those are what's going to affect the market. So you have to be very careful when these things occur, that's what happens. But as of right now, they will attempt to prop the market up until after the election. That's what happens every election. It doesn't matter who's president, who could potentially be president. You have to understand that's the way the market moves. And so there will be a lot of volatility coming up. especially during election night, and understanding the policies are what's going to dictate how the market will move for that. So that being said, upcoming events, we do have Powell giving a speech on Wednesday. Will be a big news. FOMC meeting notes. So we'll kind of look at what they're looking for cuts. Ultimately, that's what we're looking for there. So it could be a big day on Wednesday. Just keep that in mind. The market really isn't pricing that in too much. It's actually kind of diminished from last week. Because of the core PCE, which again really didn't matter. Again, they're going to continue to pencil whip this thing until something bad happens, and then they'll be like, okay, well, now we have to rapidly cut rates, and then that's when we're pricing a recession. But we do have non-farms this Friday, which will be important again because you're in an election year. They will continue to pencil whip this thing until we get into a year where the whole election is completely done. Again, don't want to show a lot of weakness until after a president has been selected. So that's what they're trying to do, despite all the issues that they're talking about. And this is something I just want to point this out. Biden had mentioned this, that and that quote unquote analysis say that we'll be in a recession if Trump becomes president. It's going to happen whether Trump becomes president or not. The economy is really bad. They are just, again, pushing a utopic view almost currently going on. So it doesn't matter who is president, they will face a recession next year if the economy doesn't break beforehand. So just keep that in mind. They themselves can't predict what is going on. So that is something you have to keep in mind. So they're hoping that they can sustain it till that point. But there's no guarantee that it can be sustained to that point. So just keep that all in mind. Upcoming policies, monetary policy is until the 31st. Core inflation, we got that all coming out on the first week of next week when we got bank earnings coming up. As you can see here, Friday, July 12th will be the first big earnings. JPM, Wells Fargo, and Citibank starting to take some banks out and kind of shifting them around a little bit next week. Following that will be big, as I think Tesla will be in that batch as well. Again, they're trying to get a little taste on what's going on with tech and then kind of moving that into the big Super Bowl week. So again, historic buybacks for Apple. That's the only reason Apple is where it is because of the buybacks. It has nothing to do with what they've been doing. They've been operating horribly bad over the past couple quarters. So just keep that in mind. I believe Tim Cook just isn't the one for Apple. They need some new innovative blood in there because it's just not working anymore. So then expected moves this week. You're going to starting to see more increases in the individual stocks because you're going through earnings. As far as SPX come down a little bit this week, despite non-farms. Again, they're not expecting a lot to come from that. They expect the pencil whipping to continue is pretty much what that tells me. So again, very interesting week ahead. We'll see what happens. There could be some big news, especially because now we're in a new earnings cycle. Anything is possible at this point. It's something I've been talking about. Again, I think the housing correction will happen within the next couple months. And then ultimately, I think the market itself over the next couple months will price in a recession, whether that is right before election. The next 5 months are going to be extremely important. Once the election happens, if we make it that far without breaking, this thing will be pushed off till March of next year when we normally correct. So just keep that in mind. And then we go from there. So we may get one final push. October is normally a really bad month as well, right before the election. So that very well could happen. So just keep that in mind. We've had times, right, the great financial crisis, things started breaking right before the election, right? So you have to keep that in mind. So it's very much a possibility. It's not off the table. You just have to be very risk-minded going over the next couple months. What could potentially be happening, gathering cash for positions, well-known companies. You don't want to go with bright new up-and-coming companies because once this thing really starts to hit, it's going to accelerate very, very quickly. That will draw panic from the Fed to have to start cutting rates, and that's what we're looking for. We're looking for that move to hopefully capitalize on the bond play as well. At the same time, that should cause bonds to skyrocket. People have been trying to time that for the past year and a half. Again, you have to wait for massive cuts. It can't be a 25-point basis move. You're looking at more like 100-point basis moves because something is breaking extremely fast. And again, that's at that point, you'll get a couple days before you're aware. They're going to say, hey, we're going to make 100-point cuts here in the next couple days on this day. and that's when we're going to do it. And that will allow you to take a bond position to be able to do that. That freak the market out. The market will start correcting. Pricing in a recession will take a couple months. And then from that point, the market will start recovering. They'll turn on the money printers and hope they can find the consumer. That is ultimately what a big issue is when you start deflation. And when you start things start becoming deflationary, is you essentially destroy this. Consumer is already destroyed, and it's getting worse. The longer this maintains, the worse condition the consumer will be in. And then again, ultimately understand at that point, you're going to get things heavily discounted. And again, the Fed are going to hope that the consumer comes back sooner than later, because it can lead to some major issues as far as production, your GDP, and all those other things. So with all that being said, if you've made it this far, go ahead and drop a thumbs up. And then until next time, I'll see you guys later.